Hello everyone. Welcome to the trading room, the midweek update. It's Joe. It's the 29th of June. We are finishing out our first summer month, and it was a quick one. I think it's been pretty fast, really, really fast, but really interesting. I'm going to give you my 2 cents. Let's share some trades together, take responsibility for the outcome. You guys know the drill. So, we had a textbook bear rally with confirmed lower pivot. You can't really ask for these. We had a massive move to the downside a couple of weeks ago off of some unexpected bad news. Then we had this beautiful move back up to resistance on Thursday. I didn't think we were going to get there. My 2 cents was I'd expect a little bit more out of. I wanted the +2 bounce, and it all came on Friday, which is great. Here we are. Monday comes in, confirms a beautiful or starts a pivot point, and then we confirm it very aggressively yesterday. Now today, we're kind of hanging in there. I'm going to get to the chart and we'll talk to it a little bit because there is a range that we could be looking at. And once again, the range we discussed earlier about, hey, we thought this stocks would stay in a range over the summer. Well, we have that chance again. Let's just take a look at it in a second here. So sentiment is definitely bearish. Selling is continuing. I think Bitcoin was actually flirting with 20,000. I saw it at 1999, something like that. So there's a lot of money coming out of these markets. We'll see if that's going to continue. Pessimism's there. Recession words are out there. In fact, take a look at this economic data, folks. GDP negative for Q1. That is a fact. It was revised for Q1 from negative 1.5 to negative 1.6. We'll get there in a second. Consumer has definitely been slowing. In fact, guys, I underestimated it. I was talking a lot about if the consumer can stay active, we might run into the soft landing that we're hoping for. However, a lot of the numbers that I was reading into and the consumer itself, the one that's still holding on that's pretty good is employment, which is awesome. For now, the first people to jump ship on worries of recession are businesses. They contract very quickly and they're overreactionary, which will spill over to employment. So we'll see. But the consumer is slowing and a little bit weaker than I thought. But we'll talk at that in a minute. Let's take a look at some of the trades that have triggered some of the things we've been talking about this week and last week. There's a lot. There's a bunch. There's a whole bunch on the bear side, on the neutral side, on the bull side. It really just depends on your outlook in these overall markets. We'll address them here in a second because I can make an argument for bullish and bearish. I really can. The move that we had yesterday was super ominous, but Friday's move pushed us outside of weaker resistance areas. So it really, really depends on your outlook and what you see. What's really cool is we don't have to trade either direction unless we get the confirmation. So what do I like on the bull side? EDU, FUTU, check it out. And Baidu, all Chinese. Okay, random, but they're still working. And then I threw Wendy's up there because I like Wendy's. So let's start with the bulls first. A little bit of a pullback going on right now, but a beautiful breakout that I had a couple of weeks ago. I really do like this ascending triangle move that it had right through here. It breaks out, gaps down, and retraces, and it just pivots, or I should say, sticks itself right at that 50-day moving out or $50 mark. A little bit of a continuation to the upside, reluctance when it comes to what these markets did over the last couple of days, but it is still comfortably above that 50-day or $50 price target, which is well above its moving averages. So it's outperforming. Something sideways is if you want to play something bullish, it's a nice place to be. I like it. I like it moving forward. Let's take a look at Baidu. Another one here in a sector that struggles, right? The tech sector, communication services have just been slaughtered. This one is holding in there really good. I do like the overall pattern in the long term, where we had the reverse head and shoulders, break out of that, set a high, came back and set a higher low. So we have this beautiful move to the upside with an ascending triangle pattern. Also, the head and shoulders reversal at the same time. It's just outperforming, and it is a pretty interesting, or I should say a fun chart to trade because it is adhering to overall technical indicators that we just love. So blindly just putting money into this, target this at a breakout to 160, or a move, I should say, up to 160, and then if it can consolidate there, a breakout up to 170. I'm completely fine with that. It's kind of tough because you have to blindly just follow the chart and forget about what's going on in its sector, which is one of the weakest, right? And one of the most reactionary and most volatile. And just kind of play it for what it is. That is a big ask and something that a lot of traders can't do. However, if you want to pull a little bit of your outlook on the economy, and if it is pessimistic, I've been through a few bear markets, folks, 2008, 2000, and I did see a lot of interesting things that held in. Health, beauty supplies, comfort, so fast foods, things of that nature. I did notice that some of like movies, so on and so forth, anything to do with inexpensive comfort usually does pretty well in recessionary or bearish situations. So this is Wendy's, right? Everybody loves this. You still get a burger for a couple of bucks. So I do like the pattern here. It's not quite there. I just wanted to pull it up because it's been on our watch list for a little bit. It didn't quite break that 19 level. Give it a day or so because it's still staying really tight at those areas. That being said, folks, I actually have a movie studio as a bear. Okay, so not everything works. So let's get going to the sideways stuff. Now, what's really cool is when you zoom into some of these on their ranges, it's hard to see, but if you can, you'll notice that it's sustaining support and resistance levels. We're right at a midpoint. Now, could this easily roll over and fall? For sure, but we have a pretty good distance before it actually retests that support at the what's that, 265 level, right? Imagine I drew over it. Sorry, folks, but this level right here. So we do have time. It could chop around. It could come back and retest this 255. If you guys want to go a little higher, let's call it 257 and a half. Fine. But it is definitely range bound. It's volatile, but if you squeeze it down to a point to where you have a support resistance area and you want to play a week or two out, this is a good place to play it. As long as the stock doesn't get below these support levels, and based on if it is going to roll over and you are pessimistic, then just don't give it as much time. Give it a week and a half, right? Maybe 2 weeks, but don't give it anything past that. Now, if you're super bullish or bearish, or I should say optimistic, then you could give it a little bit more time as it consolidates, pulls back, maybe hits 240, comes back up to the 255, 257 and a half mark. Absolutely go for it. It really just depends on your directional bias in a sideways trade, but it is right in the middle of an area. So I do like this sideways. UNH was one that we talked about. Now, when I looked at UNH, I was going to just kind of slough it off and say, oh, it is what it is. But what's interesting is we have what's referred to as an expanding range. So this pivot versus this pivot is wider. This pivot versus this pivot is wider. So instead of a consolidation or symmetrical triangle pattern, we actually have expansion. And with expansion just comes volatility. So we can choose, I don't know if I want to go to extremes, but let's just start at extremes because, hey, they're here, right? We've got this, this, and this. So now we have these sideways, this sideways range that is expanding, 450 up to 550. That's $100. I understand. However, with an expanded range and volatility comes higher price premiums for option, which becomes great for you condor people, right? If we're going to sell options, sell the upside, sell the downside, play this range. It's a kind of a cheeky way to make a buck. Now the reward risk is not going to be in your favor, but your probabilities will. So I kind of like that. I thought that was interesting. I thought it was worth definitely mentioning. All right. So let's move over to the bear side. Now, Intel was actually a sideways stock on some watch lists, but I just saw a pretty decent rollover from this move, and that was just pathetic. It was so sad. I would expect retracement back up to here that we saw in the overall markets, or at least to a moving average, and it just didn't make it. Now, folks, this is a chip chip maker. This is technology. It's a semiconductor. This is the epitome of extra. So if you are indeed bearish, and we are going to see a recession, and we see the consumer that's going to tighten, the last thing they're going to buy is a new computer or a new phone. Oh, I shouldn't say that. Geez, people would rather buy a new phone than buy food, right? However, it's not going to fare well. It's not going to do well. It shouldn't. It's just in the wrong industry when it comes to, hey, I've got to buy food, gas, I got to worry about my mortgage, so on and so forth. It's in a horrible industry for that. So I just like it where it's at when it comes to outlook, but I also like it technically, as this just looks like it wants to roll over and fall further. So one to really actually just kind of break down. Now, it's not just Intel. I don't want to pick on this, but it's basically anything in the tech sector. Think about that. If we are going to contract, we're going to get rid of the fluff stuff first. This happens to be part of it. Now, that being said, let's go exactly opposite of what I talked about with Wendy's. This is Warner Brothers. Usually there's a flight to safety comfort. Now, we're not quite, quote unquote, in a recession. And when we do get there, this might recover. This might have its own problems when it comes to the bottom line. I'm sure that its margins are off. I'm sure that it might be something political with it. I shouldn't say political, but maybe, oh, I don't know. Whatever it is falling apart. Usually these do pretty well. Maybe they don't have a lot of movies coming out this summer. We'll see. But I just like the fact that this based with sideways broke down and that's doing it again. So when I see patterns that are consistent from the previous patterns, I love that. So taking advantage of this, my probabilities of taking advantage of another move down to maybe 12, just below 12 and going sideways are super high because this seems to do this recently. Now that was a pretty good amount of volume at a day that didn't do anything. So indecision, not a lot. Everybody came in to buy and sell at the same time. It didn't really go anywhere. This is a stock that's just kind of out of favor. Plain and simple. The other one we'll talk about here, this was Alcoa. I thought I would for sure make mention of materials. I would make sure to make mention of utilities and energy as they are very, very, very recession reactionary. And when it comes to expansion and growth and it starts to slow, guess what slows? The demand for steel, which once again, it's on the bear watch list. Aluminum, basic materials, things of that nature, they fall apart due to the expectations of slowed growth. So this is kind of following suit here. I do like this below the 50. It doesn't have to break this 45 mark here if you want to play that game. It just has to stay below 50. And right now it looks like it's kind of chomping around and consolidating. So something bearish to sideways, completely cool. So guys, it doesn't matter what your outlook is. We don't have to be super directional. We just have to play sideways to down, sideways to up, depending on what we see in those markets. All right. Speaking of which, let's get into the market analysis and move into the overall. Now, I'm going to have to agree with what Corey talked about on Sunday and again yesterday. This is optimistic. Real quick, let's do a breakdown of what's going on today. We had a very good or strong bearish confirmation when it came to a pivot point set yesterday to the downside. Volume did increase. It wasn't a lot of volume, but it did increase a little bit. We rolled over. SPY and the Qs, the diamonds, you can see down 1.5%, almost 2.5, 2 3/4, 2 1/3, excuse me, and then 3.5 on the Qs. So a little bit bearish. The only thing, and I'll just go ahead and say this, the only thing that has me a little bit more bearish than I should be is that energy is climbing again. Oil is climbing. The futures are moving higher. If that continues higher, I don't see how that helps inflation, and I think that hurts us, at least in the summer. So I don't like to see that bounce. If this was more sideways or flat, then I am on board with a complete consolidation. Maybe this is kind of a temporary bottom sideways summer. If oil continues to increase, I don't see how we get through that. There you go. There's my 2 cents. So let's take a look at the chart because I do like some of the patterns that I've been saying. Sorry, folks, I got to get my pen back up. I keep getting rid of it every time I need it. This was the target that I expected us to hit. I was talking about this on Thursday. Now, folks, Thursday was right here. And I was thinking to myself, boy, if we can't even clear this gap down, this area, and 380 becomes the new resistance, I think these markets are in for a problematic summer. It's going to be pretty pessimistic. Friday comes in pretty aggressive and does great. It gets right back up to the resistance levels Monday, met with some pretty strong selling on Tuesday. But what's interesting is this 380 is no longer just an area of a gap. It's now become a support level. So this goes right back to what Corey was talking about yesterday, and well, we mentioned of it on, well, no, yesterday, that this could be a bounce. This could be a support level. We could revisit this 380 mark, or maybe even a little bit higher, and this could be, what is this? That's right, folks, a head and shoulders pattern. It's super early to tell, and this is a very difficult day because this is the coin flip. I could see us completely fall apart. We did get the confirmation of negative GDP for the Q1. We do have a consumer that has definitely fallen off and not consuming as much as we thought, and there's enough pessimism out there for us to continue lower. Whether the sentiment goes that way or not is up to our charting. So keep an eye on that because we're at a pivotal point, I should say, for the week. I guess I was going to say a little bit more than the week, but the week, we'll leave it as that. So let's go to the diamonds. Kind of the exact same thing. Didn't think it was going to get there. Popped up, hit resistance. This one actually hit its 20-day moving average, but it's finding support at 310. The same idea. I don't have to rehash this. Now, could this set a range? Absolutely. Let's move to the Qs, and I'll see if I can't draw that for us. For sure. The Qs went a little bit higher than its resistance, which it could have because, or it should have, because this thing has been beaten down for a while. So I would expect the 300 as resistance. However, if this 280 holds and we do stay above this lower pivot, and this is for all three of the indexes, we have ourselves what could be a pretty good sideways range through the summer. Now, I want to echo something that Corey said yesterday. It's really cool. We're expected to increase interest rates. We're expected for the consumer to slow down. We're expected for housing sales to go down. We're expected. This is all expected. So even if it's bad and it shows some bad numbers, it's expected. What the markets don't like is the unexpected. So unless we get some sort of fly ball coming at us at left field or whatever, I'm sorry the analogy, I might have butchered that. However, if it's something unexpected, then we might fall apart unless these markets are indeed super pessimistic. So we're going to have to just kind of follow along. It's pretty difficult. All right, there's my 2 cents. Let's move on to our economic reports. So I'm just going to go directly to this one. The consumer confidence number dropped. It's below what was expected. However, it was also confirmed. You know, confidence is one thing, but when I get a GDP number that's negative and it's lower than it was expected in the past, it throws out some of the optimism that I had that the consumer was actually going to hold these markets up or at least the economy up for a while. Doesn't look like that's going to happen. So we'll see where that goes. Now, the Case-Shiller Home Price Index didn't drop much. I thought home prices would catastrophically fall, and they're not. They are falling, but not as much as I expected them to. Our trade in goods, we're back over the 100 billion mark. 106 expected. It's only 104, but that 100 billion deficit is just bad. Now, I am reading from bottom up, folks. Durable goods orders, I'll start from the top. Durable goods orders increased, a little pop in core capitals, and pending home sales was expected to be a massive drop. But I imagine it's that last-ditch effort, and we've made mention of this too. This is a lagging number, which could be just those last home sales that spilled in before interest rates got too out of hand. Now, understand, folks, you can lock an interest rate and then close on the house 2 or 3 or 4 months later. So maybe those are some of the numbers that are coming across. So what do we got upcoming? PCE inflationary numbers. This is one that the Fed looks at pretty intently and is its main gauge of inflation. However, I don't think that there's any sort of misunderstanding of where we expect that to go. Jobless claims and continuing claims here on Thursday. Those numbers I'm going to look at pretty intently because they've been so strong. But if we start to see those increase, we've got a bigger problem. Manufacturing, PMI, ISM, construction spending, so on and so forth. So let's take a poll on the class. I'm going to do this quickly because I feel bad about the people that have to watch this. I'm going to launch it and let you guys give me your outlook. We were pretty optimistic, I should say, in the trading room. I do believe that Corey and Darren will. Darren still thinks that we've got a lot to go on when it comes to the bear side, and I have to agree. On the short term, Corey was making mention that, hey, maybe if there's no more unexpected bad news, we could consolidate and even bounce a little bit. So I can see both sides of that coin. So kind of a fun coin to flip. I do believe we were -3 for the monthly outlook, and either a +1 or +2 on Sunday's trading room. So we'll start there and go forward. All right, guys, the voting is going, and we're at 83% voted. And I'm going to go ahead and I'm going to give you the full minute. We're at 50 seconds. So we'll take a look at this theory for another 5 seconds. 91% votes, and then I'm going to share and show you guys the results. Cool. Thanks for doing this, by the way, folks. All right, that's it. The poll is closed. Let's go ahead and share these results. So 67% -1, 43% 0, 14% +1. We are definitely a -1 to 0, probably -1 outlook. All right, guys. Well, thanks. I appreciate that. And I am right in line with you. So overall, -3. I don't know how I can't be based on yesterday's candlestick and this beautiful bear rally pattern. Below the 20, below the 50, 20, 50 sloping directly. It's a beautiful just run up, touch resistance, and roll over. I think we hesitate. This is why I'm at a 0. I truly think that these markets try to establish a new bottom right around that 380 level, but I don't know if it's going to hold without something optimistic. Now we talk about, hey, the unknown the markets hate. However, the only way to gain traction is to see numbers or have an event that actually shows traction. Unless we get something optimistic, I don't know how we can just turn around and just bust through 400, so on and so forth. I do think that we could try to establish a higher low here over the next day or so, which is why I'm at a 0. But I don't think it's going to take much for these markets to fall apart. One thing that I'm looking at, guys, and let's get into the sector analysis as we move forward, is the correlation of cryptos. And right now, Bitcoin's holding in there, but I could see if we break that 1999 level or the 20,000 level, I don't know if we get a slew of sell orders or so on and so forth, but that could cause some serious problems. Just my 2 cents. So weekly performance, let's take a look at what's going on here. Everybody's still enjoying that pretty good move from last week, right? We did have a little bit of a hesitation Monday and then a sell-off yesterday, but today we're holding in there. Going from the week to week, and that's what these numbers are from last week, Wednesday to Wednesday, you can see we're still holding some pretty decent gains. Everything positive except for materials. Now, I'm going to say it once again, folks. Why would materials start to drop? Well, because if the expectations are for less demand for stuff, well, then they should drop in value, right? Energy, utilities, our bills, power, gas, electricity, that's going to go up, which is why this is the strongest sector. Now, it does look to me like an overall bear rally. It did hit a beautiful resistance level at 70 there and the 20-day moving average. So this could start to roll over with an increase in selling pressure. Right now, the volume has been going down since the bounce last week. Now, moving on to our materials, you can see that materials had a very anemic bounce, not very much at all. Didn't even get close to resistance at $80 there, and has rolled over, and it looks like it's going to retest the support levels or the lows. So let's do a quick conclusion, and we're going to go out and take a look at some of the trades that you guys are looking at. All right, let me open this up so I can read. There we go. So the technical indicators are in place for more selling, period. We just need to see if this level holds. What's really interesting about where the markets are at, it has that beautiful bull or bear rally. It hit a moving average. It hit resistance. It had a beautiful small candle on Monday, confirmation today. However, there's a little bit of a hiccup down there at the previous level with the SPY at around 380. So let's see if that breaks or if it holds. If it breaks, and folks, I'm going to have to tell you, I'm leaning more towards the bear side. I'd like to see it break with more selling. But we might need a little bit more of a catalyst than the expected bearishness that the markets know is going to happen. So, sentiment, bearish. Still looking for a range to settle into. Most of the time, summer trading, we find ranges. Rob just did a video on summer trading. And back in the day, summer trading used to be super quiet and it was low volume. That's not the case anymore. But they do, in my opinion, still tend to range. Once they find an area that they're comfortable with, people are on vacation, and they just kind of let it kind of bounce through a range through the summer. We'll see if we find that. Economic data slowed down, confirmed with the Q1 GDP. I expected the consumer to be stronger than they were. Obviously, I was a little bit off, and the GDP says that, yeah, you were off. That number's off. Employment remains solid. Knock on glass here or wood. That needs to hold in. If that doesn't, I think we get to the R word. All right, folks, that's it. So let's go out and take a look at some of the trades that you're looking at, if I can get to this. All right. Okay. All right, cool. So we made it. Just want to make sure that I have the audience view going on. All right, folks, here we are. Let's jump in. You can see that the Dow is pretty much flat. The Nasdaq's a little bit less. And same with the S&P. They're just kind of leaking a little bit below par there. I'm not sure how long that's going to last. We'll see. It just depends on where they want to go. So let's talk about our first trade. This is the SPY trade. This is with John. He's talking about 715, 222, 385, 365. Let me get zoomed in here, and then we'll get the numbers. Okay, cool. 385, 365, bear put spread. Nice. I like it. For the next month, 15th. I'm going to check my calendar here, guys, while I got a chance. Yeah. Okay. Right. Let me get 385. It's going to be hard, isn't it? You're going to make me really, really squint down and draw this. So that's 80. 5, about right there, and 375. Okay. 65. We're back. Yeah, I like it. Yeah, nice. Just waiting for to see the rollover. Obviously, John definitely has a bearish outlook. I tend to agree. Today's candle, if it holds at 380, that's a support level. But if it doesn't, and what I do want to see, I didn't get to mention this, is I want to see a little bit more volume. To tell you the truth, I really do. I think it'd be kind of nice to see a little bit more volume as this starts to roll over. But I like it. Straight up trade on the ETF itself. Let me put that down. SPY. Okay. Joe's looking at peak. All right. Bear rally. Looking at a 26.24 bear put for July 15th. 26.24. Makes total sense. Yep, I like it. Looks good. Looks good. Let me zoom in a little bit on this. I'm going to have to change my drawings, but yeah, I like that. That's pretty decent. Pretty good move. Going for the month. All right, let me write that down. Another thing to make mention of that I thought was cool, we are about, well, not, we're leaking into, I should say, earnings season. So keep that in mind when you guys are looking for trades. Let's take a look at Roku. This has been a fun bear trade for the last year or so. Oh, another trade. Looks good. Justin's got July 8th. So 2 weeks here. Either a targeted butterfly, $5 wide. Looking at target about 80 bucks. Okay. And what was the other one? Either targeted butterfly, $5 wide, or put debit spread. For sure, absolutely. A 90-80 put debit spread, or, well, sorry, an 80-85 85 put butterfly spread or an 80, 85, 75, right? Because you said $5 targeted butterfly. I like them both. I like them both. Not going too long either. Not going all the way out to 15th. He's going to the 8th. So cool. Thanks, Justin. Let's get to Apple here. For Brian. 139, 133 bear put spread. Yep. 139, 133. Right about, what do we call this? Yeah, that's fair enough. Sure. It's bearish. It's got confirmation yesterday. Today is such a pivotal point. Have you guys noticed that with some of these bears that you guys have been posting? These are great. And even though it's got a green candle today, I'm cool with it. I'm fine. It's still below the confirmation candle of yesterday. It's a little bit difficult to try to trade your opinion. It'd be easier if this was a red candle, but hey, if your confirmation was yesterday, it's yesterday. Just trading the markets in front of us, right? Thanks, Brian. All right, let's jump over to James. Has got ExxonMobil. All right, ExxonMobil. July 1st, July 8th. So we're doing a couple of days out to next week. Calendar looks great at 98 bucks. Oh, sorry guys. I've already got pen on there. Let me find that. Okay, we're expecting a little bit more of a jump. You said 98, so that's going to be, yeah. Yeah, okay. Expecting a little bit of move in gas. It's down today. Exxon's down today. That's fine. But look at that pivot point. Looks strong. Bearish candle today because the rest of the markets are up, right, or holding in there. But if the markets roll over, maybe this can move higher. We'll see. I'll put that down on the bull watch. Thanks, James. All right. Chris has got STNG. Oops. All right. Okay. STNG. Ooh, look at this. Consolidating up the high there. Call butterfly for the 15th. 35, 38, 41. Let's see if I can draw these. 38, 41, 35, 38, 31. Right where it's at. Okay. Cool. Got into it yesterday for about 75 cents. It's 65. Held up yesterday when energy dropped. Today's down more than sector. It's okay. It's got a really strong support level here at 35. Take a look what this thing did over the last couple times it's tested it. So in these, what's really cool, trust in your risk reward and just let it go. Just sit on it. I'll put this down as, actually, I like it as a high base unless it breaks down. So I'm going to put this down as a bull. And I'm going to put a sideways on it because you played it at the 38 level there. So I like it. Just hang in there. Doesn't look good today. Doesn't mean it's going to fall apart, right? Thanks, Chris. All right, Sebastian's looking at ARC. Oh, good old Kathy. What's she up to? Last I heard, Kathy was thinking that we're already in a recession, is what she said. We'll see. Range pullback to 35. Diagonal put spread. Let me zoom in. August to July 8th, week and a half from now. 47, 37 and a half. Okay, sure. 47, 37 and a half. I hope I'm close. I think that's close. Nice. I love it. I do. I like it. Just slowly bleeds off. We'll continue to sell puts as it remains in range. So he's got the 35, the 37 and a halves in July 8th. Cool. Yep. So yeah, you can sell again because you have August 19th. Yeah, you can sell a couple of times. I like it. Let me put that down. ARKK. Thanks, Sebastian. All right. Moving along. Okay. Oh, Ronald, what do you got here? Do you think the SPY should go sideways in the next 2 weeks? If so, it could be a range pullback. I'm a new student and I'm going through the program and I want to well understand of the future. Welcome, Ronald. I love it. Okay, yes, for sure. Let's do this. SPY here. Yes, absolutely. And I might rehash this again, but let's do it real quick since it's a pretty interesting topic. It's one that I've discussed with the boys here, and it really just depends on your outlook. But yes, this has the potential, one more time, I'll just draw it for fun, to find and establish higher pivot low. It really depends if we can hang on, and I'll put a little asterisk here, this little gap where it hesitated on Thursday. This is a solid argument, the 3080 for a support level. If it holds and we can see a march above the 390, 410, hitting this 200-day moving average and get above that 390 mark, this one here, you betcha. There's an absolute argument that, hey, now we're back to, and let me get rid of all these chicken scratches and start over, the potential range that we talked about at the 3 weeks ago, of a range-bound summer. It could find itself back here. Absolutely. What is this going to take? No more unexpected bad news. And that's about it. That's about it. I don't think any of these companies are going to do very well or in earnings, and I think people in the markets expect that. So yeah, we'll see. Now, that being said, we do get another huge move in oil. We do see a little bit more out of control inflationary indicators. We see jobless claims increasing and layoffs happening. Yes, we could absolutely see another one of, well, I don't know if it's going to be this aggressive. It could be. And then we could follow that volatility index to see if panic is indeed in there. So that's kind of a fun topic to end on. Thanks, Ronald. We'll just have to see. That's why we'd love to trade those markets in front of us, right? Okay. Let's have you. Oh, one last one popped up. Constellation Brands from Joel. Straight 245 put. End of July with a target of 215. With confirmation, sure. Now remember, folks, these do okay when it comes to recessions, meaning some things that are bad. Consumers defensive. I always said that it was beer, cigarettes, movies, makeup, and fast food. Any of the creature comforts seem to do really well in recession. That being said, it doesn't mean that they're going to make money. So be patient with this, Joel, because you are above two moving averages with one big push to the upside. So consolidation, if this rolls over and starts to fall, 215 could be an aggressive target, but just make sure that you're starting to see that fall before you do so. There are support levels here, right? Support level here. So that might be a little bit too aggressive of a target. However, if you truly think that these markets are just going to give up and fail and the VIX is going to spike, then yes, this could actually roll over. So just you might just pick spots as you go. Right? Let's try here first, maybe here, then the 230, then the 225. Take your time. One thing I love about trading, folks, is I don't have to make a call 5 weeks out. I can make one call each week for 5 weeks and have a lot more probability, a lot less risk, a lot more reward, so on and so forth. All right. Okay, oil looks like it might be putting in a bear rally. Let's take a look at OXY. One last trade here. And then we'll go. OXY. Oh, yeah. Could be. It could be. Yeah, that looks really like a pretty strong bear rally. Something back down to 55 there. Sebastian, absolutely. We'll take a look at that. Let me write it down on the bear watch list. Then again, where it's at, it could consolidate and turn back up. It just depends. So but I do like the confirmation of the pivot point there to the bear side. So looks decent. All right, let me start typing these in. Otherwise, I won't remember to. All right. Cool. Thanks for the ideas, guys. We're in a pretty interesting situation in these markets. I could see it go either way. I'm very excited to take advantage of either way. I don't really care, to tell you the truth. I want to see them do something. I'll be honest. I am leaning definitely more towards the bear side. My outlook would be more bearish than bullish. Oh, guys, I'm actually typing in XOM. There we go. I was typing in last week's trades. Let's type in these trades today. STG. Moving over to the bear side. Yeah, looks like they're having a hard time gaining any real ground today, huh? It's a really big move to the downside yesterday, so we'll see if we can muster any sort of a bounce. And then OXY. All right, there we go. So here's what I wanted to show you. And let's get into ST and G. I do believe that's a little bit of a sideways to it as well. I did like that trade. Awesome work, folks. Thank you so much for your participation. And as always, you know how to get a hold of us if you've got any questions. And we will talk to you next time. Bye, everybody.